Welcome back to another episode of the Realm Podcast. As always, I am your host, Robert Williams. Today, I am joined by Andrew. Go ahead and introduce yourself.
Hey, thanks for having me, Robert. Andrew Carell, serve as a Director of Insurance Solutions at Security Scorecard currently, but my background prior to that was in cyber insurance. So I was a small and mid-size technology underwriter, doing a lot of work on E&O and cyber, and then did a year of insurance product development at an insurtech startup based out of San Francisco. And happy to be here. Thanks for having me.
Yeah, always happy to have people with a nice, varied background. Sounds like you've kind of dipped your toes in a lot of different facets. And you work with Security Scorecard now. What are they, what's the short elevator pitch version of them?
Yeah, so we are our goal is to be embedded in pretty much every cyber insurance decision made globally. So we do work with individual enterprises, insurers, brokers. Really, we try to find and provide visibility into cyber risk. And so there's a lot to that. So a lot of it is just being able to kind of visualize, like, what does a company's attack surface look like? How do we help them become better? How do we help companies translate the investment that they're making in security into like a return on that investment and for positive business outcomes? But yeah, specifically within the insurance space, like I said, we help enable brokers, carriers, wholesale brokers, reinsurers, you name it, the ability to make better risk decisions, more informed risk decisions, help kind of see what the attacker sees, right? And with that, like, be proactive versus being reactive. So yeah, that's a short answer on that.
Several minutes later, the short answer, yes. but yeah, so do you find yourself working more with the insurer side or like the end users client side? Like, because it sounds like you kind of fit in the middle. So is there, like, who kind of uses you guys more? Is the insurers or like the individual companies?
Holistically, like across the company, it's individual enterprises. Like the vast majority of our customers are individual enterprises monitoring their own attack surface and that of their technology vendors. So running their vendor risk management programs through us. So yeah, the vast majority of our customers are using it there. But there's like an interesting tie-in when it comes to insurers. Recently I kind of looked at it. We're nearing about 50% coverage on kind of gross written premium in the United States. So companies that we work with are that trust us for their underwriting and portfolio monitoring, represent almost half the market. So it's an interesting cross point because, like, on one side, you've got an insurance buyer who's using us to monitor themselves and their vendors. And you've got an insurer who's on the other side of that coin. They're selling the insurance. And as you're aware, and I'm sure the listeners are, there's a lot of like information. I call it like, kind of like, there's not everyone's on the same page. So like information, the word escapes me. We can just edit that out. But they're looking at the same information, but they're not working together on it. So if I'm an insurance buyer, I'm kind of I don't know what my underwriter is looking at. Right? I don't know how they're evaluating me so that I can't better prepare and kind of get on the same page and work together with them. And kind of same thing, right? So our platform helps kind of break down those barriers. We're all looking at the same sheet of music. So yeah, it's like it definitely helps that insurance buying process go much smoother to where you're not having to like rush right at the end trying to take care of a bunch of subjectivities. Where it's like, look, I work on this stuff 365 days a year. Why don't you just like tell me what I should be doing? Yeah.
Yeah, that definitely, it sounds super helpful for very specific places. I know last week I was talking to Brian, and he talks about, just buying cyber insurance these days is a cumbersome task for a lot of companies, especially once you hit certain sizes. The insurance companies, they're like, oh, well, do you have this? Do you have that? And it's a whole bunch of questions, and sometimes they want proof, sometimes they don't. So you got to make sure you have all your ducks in a row before you can even just get insurance. Let's not talk about like the process of actually getting a payout for something, because that's a whole different beast. Um, so what do you kind of see as challenges in that market? I mean, I know you're talking about breaking down barriers between the customers and the insurers, but is there any kind of, I mean, I don't know how long you've been at Security Scorecard, but have you ever seen challenges for maybe like people don't really understand the use case, or like, oh, well, I've already got cyber insurance. Why would I use Security Scorecard? What does this technology bring for me? So do you have any insight on that sort of, or that angle?
Yeah. So yeah, I mean, for folks who are saying, why would I invest in like my own security posture when I buy insurance? The analogy is a couple different ones that I think we'd all be even more familiar with is like, if you drive a car, you're not going to say, well, I'm not going to wear my seatbelt because I got car insurance or I got medical insurance. It's like, no, insurance is there for like when the worst things could happen that you could not possibly prepare for, or
Mm-hmm.
they elude your preparedness measures. It's not the like, I'm going to go 150 down the highway and just like, cool, insurance will pay it. Same thing on your house, right? You
Mm-hmm.
don't say, well, I'm not going to buy smoke detectors or I'm not going to buy locks for my doors because you know what? I got a homeowner's insurance policy. Same thing on cyber, right?
Mm-hmm.
Protecting yourself. It's a three-legged stool. Like part of it is transferring risk, and that's what insurance is there for. And that's for, if you can't afford an extinction level event, like I don't know, average ransomware, depending on who you talk to, $2 to $3 million all in. Like
Yeah.
if I'm a business owner and I've got $3 million sitting in the bank with nothing better to do, fine. Like I won't buy cyber insurance or I won't buy security because I'll just pay for it. But like I've never met a business owner that could say that. And so you invest in security to help keep out the low hanging fruit. But insurance is there is like this stuff isn't fail proof, right? Where cyber
Right.
risk is we're fighting humans, sentient beings. It's not like fire, right? Fire has been around for millennia. It hasn't changed over time. It still burns real hot and it behaves just like it used to.
Yeah.
But cyber risk, it's always evolving. So it's got to be a conjunction of the two.
Mm-hmm. Yeah. I mean, you're absolutely right. I definitely agree with everything you're saying there, because something that we've mentioned previously on previous episodes of this is, if you're going to get hacked, you're going to get hacked. The low hanging fruit that we mitigate with, EDRs or backups and just good practices, yeah, sure, that'll prevent somebody from downloading a ransomware and suddenly Steve infected the financing computer. But that, like, you can mitigate that to a degree, but from a larger perspective, if you're being focused, if somebody is specifically targeting you, like we saw recently with MGM, like you're gonna get hit, and
Yeah.
you need to get positioned so that way you have protection and coverage in case those things happen.
Yeah, and it's a good thing to point out. So the way that I view cyber attacks is they call it kind of fall into two buckets. One is the attacks of choice. That's where threat actor group wakes up one morning and is like, I'm going to go after MGM. That's a hard defend or that's a hard adversary to defend against.
Mm-hmm.
Like you give them enough time, and you're gonna you're playing whack-a-mole. You're
Yeah.
gonna not hit one of them, right? They're gonna get in,
Mm-hmm.
and yeah, having like proper posture and hygiene will help kind of like mitigate some of that severity, and maybe like help them not move around so much. But yeah, you're right. They're gonna get in. But I would say like the vast majority of like actual cyber insurance claims, no one is waking up and saying, I'm going to go after like Bob's Plumbing, right? They
Mm-hmm.
don't know who Bob's Plumbing is. But they're called attacks of opportunity. And
Mm-hmm.
so this is the like ransomware as a service. Like I've got these tools that are just going to scan the attack surface of the entire internet, and I'm looking for specific vulnerabilities. And maybe Bob's Plumbing has one of those vulnerabilities, and I'm going to go after him. But if he's aware of those vulnerabilities before a threat actor finds them, he has a real chance to patch that and not show up in that like scan and be on the list, the naughty list, if you will, right around Christmas time. I guess that's time appropriate. But yeah, most of them are like crimes of opportunity, attacks of opportunity. Anywhere between 50 and 70% of ransomware claims, not just like high profile ransomware events that get reported on the news, they're from unpatched software.
Mm-hmm.
And sometimes like it's not 0-day vulnerabilities. Like these are like one of our like top CVEs that we're tracking at Scorecard. It is a 4-year-old CVE, 4 years old. That's an old CVE, and it's still active and it's still making money for threat actors. So that's where it's just like you talk about the low-hanging fruit. Like that's just basic blocking and tackling. Like go outside, look at your house. You got any broken windows? Go fix the broken windows. And the robber that's casing the neighborhood, they're just gonna keep on rolling, right?
Yeah, I mean that's definitely true. I feel it's been a while since I've looked into it, but I believe when the Wannacry, or maybe it was Meltdown, one of the two, it was like an 8-month-old patch that like it already had been addressed, but because people tend to not push their patches, it's just this thing became super widespread just because people didn't keep up with their patches. And in the year of our Lord 2023, most patches is automatic. So all you got to do is just click update.
Yeah.
So it's
100%.
Arguably, there's no excuse for why you should be running.
Yeah.
At least within a couple of days of those patches coming out.
Yeah,
you shouldn't be
or just have some
months.
sort of compensating control. I mean, I get that there are going to be some instances where it's hard to patch immediately. You've got to, test out a patch or whatnot. But like, there's got to be some level of compensating controls, like, going back to like basic hygiene, a level below. Like, are your networks segmented properly so that, yeah, if you have to run an endpoint or something that's unpatched for a time for like various reasons, and not ones that are just like, I'm lazy and I'm not going to like participate in patching Tuesdays.
Yeah.
Like have a plan, and again, like I get it, it's expensive, it's time consuming. Not every business can afford it, but like, I feel like a lot of it is, like you said, is preventable. And the playbook's out there.
Oh, they are. I mean, every single vendor that we've ever interacted with, whether it's Fortinet, Veeam, Bitdefender, Malwarebytes, SentinelOne, and anybody we talk to, every single person has like a workbook of, hey, here's your best practices. And sometimes it's not even like best practices for Veeam. It's just like, hey, here's your best practices for just having backups, period. And I just, one of the big things in almost every single one of those books, it says keep up to date. If there's a new patch, push that patch as soon as you can. And that's how you avoid a lot of these big problems that are out there.
Yeah. I mean, what is the old saying? Like, you don't have to outrun the bear, you just have to not be the slowest one.
Yeah.
Just like outrun your peers. And a lot of that stuff takes care of itself.
Oh, yeah, absolutely.
But
yeah, so that kind of segues into like the last kind of thing I wanted to touch on here, which is what's something that you've learned in your years? I mean, I know you've been plugged into a lot of different facets, so you may have a unique perspective on this, but what's something that you've kind of picked up on the difficult way that you would want people to know so they don't have to go through kind of that same headaches that you have?
Yeah. So it ties back to, why I joined Security Scorecard in the first place. So like I said at the top, I got my start in underwriting. So I was an underwriter, underwrote a lot of tech E&O or errors and emissions coverage for technology companies, huge cyber component into that. And the way that you underwrite, it still happens today, is generally like it's a PDF questionnaire that gets filled out by the insurance buyer. And it's it's like any other kind of control assessment here, but it's a series of simple questions, mostly a lot of yes or no's, some context in there, but a lot of yes or no's. And that is what you use to underwrite. And so you'd go through like, oh yeah, everything looks great. They patched their software when, within 30 days, they do this, they've got this control. Awesome. Cool. Great rates, and put them on the books. And then, fast forward some measure of time, whether it's weeks, months, or maybe even a year into the future, and you get the dreaded large loss notice. It's an email that comes from claims that you get copied on because you're the underwriter record,
Right.
and you're like, claim submitted, $500,000 reserve, right? We're estimating this could be a 500. I'm like, oh my gosh.
Ooh.
First thing you do, you rush back to your underwriting file and you pull out that application. What the heck did I get myself into?
Right.
And everything's roses. Everything's roses. Everything was good. But then you look at the root cause. Oh, it's unpatched software or poor password management or whatnot. And so that is the thing that I learned the hard way. And I was, I hate to be like the Shark Tank guy or whatever, but there had to be a better way. There had to be something out there that we could see this information and not run into this. So that's what I learned the hard way, is that, like, one, underwriting cyber is kind of hard in that questionnaire, if you're lucky, it is filled out completely and accurately. And I want to make clear that I don't think that the vast majority, probably like 99.99999% of applicants are answering this truthfully to the best of their ability. There's no fraud going on. But even if they do it correctly the first time, like, it's outdated tomorrow, right? Cyber risk is dynamic. It's ever changing. And so even if you get it right, all it takes is one patch not to come through. Or maybe somebody forgot to put the firewall back up when they're doing general maintenance. Stuff happens. And so, like, going from a static 1 day review of an insured's like attack surface hygiene, it was just not enough, right? And so I wanted to come to Scorecard to, like, build those tools to enable an underwriter or somebody looking at a portfolio to understand how that risk changed. So it's trust but verify, right? If your questionnaire says you have a patching program in place, well, I should be able to look at, like, a feed of data that says, well, you've got these, like, high severity CVEs floating around and you haven't patched them for 90 days. Then that's a problem, right? And I wouldn't want to use that tool for, like, nefarious reasons, like, here's the stick, like, you're out. Or, like, let's start a conversation. Like, maybe you don't know about this stuff, right? Maybe you don't know that, what do they call it? Shadow IT, like Steve in finance that we talked about earlier, click the link. Maybe like has a rogue server that we didn't even know was on there, right? And he's got all these unpatched CVs. Steve's a problem. But just having the conversation and being able to be more dynamic in your underwriting. I mean, I call it a 365-day renewal cycle. Like, this stuff's constantly evolving and changing. And if you're not monitoring that in a real way for when those ports become open, when those new CVEs hit, like, I don't want to just be sitting around my phone waiting for somebody to call me saying they have a claim. Like I said, 50 to 70% of ransomware is based off of software patches. Great. I can see my whole environment and all my policyholders, and I can see what patches or, like, unpatched software they have. So I'm going to, like, work with them more proactively and actually prevent claims, reduce loss ratios. Like, that's the stuff I learned the hard way, is, like, you can't just do this on an island. Like, there's data at your fingertips, and if you're not using it, like, this is what we see in the market today. Like, you see rates go up and they go down. They go up, they go down. You require these controls, and now some carriers are getting lax on that. I'm like, that's a problem. Like, we haven't conquered cyber risk. Like, why are rates going down? Why are we getting, like, comfortable here?
Yeah. Well, I mean, we can spend a long time talking about that, but I feel like a good chunk of that is every single time we think we get a handle on all the different ways cyber we got this, so you got an antivirus, okay, cool. Well, now antivirus isn't enough, because, like, now we have viruses that the first thing they do when they hit your system is disable your antivirus. So now we have EDRs and XDRs that stop that service from like, we have to keep evolving and keep changing our protection methods. And I think that's one of the things that we keep running into. Maybe the insurance company's like, oh, well, everybody's got antivirus, so rates can go back down, because if you got antivirus, you're safe. Oh, well, the antiviruses are a little out of date now, so rates are going to go back up. Okay, well, hey, here's these EDR things are coming out, and that's preventing stuff, so rates are going to start going back down. And then and I'm sure there's going to be another evolutionary step with the attackers that's going to make rates go right back up. And it's a seesaw. You're just up and down and up and down.
Yeah, I mean, EDR is a perfect example. Like EDR, like going back to the like simple version of what an insurance questionnaire is. They ask a question: do you have EDR in place? Yes or no? Yes. Well, you're not asking if it's being monitored or is it in passive mode. You're
Right.
not asking how many endpoints is it installed on. So you can check
Hmm.
the box all you want and like, yep, we saw that we got EDR. Any policyholder that we write policy for, they got to check yes to this. Well, technically, if they check yes, but it's in passive mode, are you really like, is that a like true sense of security, or are you just like lulling yourself to sleep? So it's the ability to like, yeah, take it that step further. Like, well, it's not good enough that you have this. It's like, is it deployed properly? Is it implemented well? Is it monitored? Like, is it actually doing the thing? But otherwise, like, yeah, you check a box, you buy a software, and like, cool, like now I get cyber insurance. And that and it's hard. Like, I'm not to say, like, I'm not trying to say that this is an easy problem,
Hmm.
because there are like real headwinds on actually asking the right questions and getting the best possible view of your insurance environment. But you know, you can't just stop with the yes or no question.
Right, because I mean, I've seen some insurance forms where, well, first off, sometimes it feels like you're taking a test because it's like 30 questions, and it's just like,
Oh, 30 questions is the godsend today. It's
oh, well, yeah,
like
I've seen
upper bounds. It's crazy.
it's insane, but like they always feel like that middle school question where you just know what the right answer is. It's just like, hey, do you have a password policy management? And like the first answer is like, we have a password policy and it's enforced, and people have to update their thing every 30 days, or we have a password policy, it's updated every 3 months. We have a password policy, but it's not enforced. We don't have a password policy.
Yeah.
It's like, okay, well, clearly I know what the right answer is here, and
Yep.
I feel like maybe sometimes people kind of get lost in the sauce on those millions of questions they're answering and just kind of going like, oh, well, that's the right one. May not be what they have because there's no real, and this is something me and Brian have discussed at length. I can't remember if it's actually made it on a podcast episode or yet, not yet, but there's no checks and balances for these questionnaires. The only real checks and balances is when a claim comes in. Well, hey, you
Yep.
checked a box that said you had EDR. Well, we have EDR on the servers, not the
Yep.
workstations. So,
Exactly. Yeah. Simple questions, you get simple answers.
yeah.
Technically, I checked yes, and it's technically true. But you know, and so you talk about like the checks and balances. Like it's tough because like when I talk to underwriters, like there's not an underwriter out there that's like, I feel 100% confident in our like the questions that we ask. It's more of like, what's the market going to bear? Because like if I'm an insurance buyer, let's just say, and I get 5 companies that I want to apply for, and I get 5 different applications back. And let's say my broker's like, you know what, they're like close enough in the product and the level of coverage that you're going to get. But one questionnaire at the high end has like 95 questions. The other questionnaire has 25 questions. And I've got 3 more that I got to fill out if I want to like get quotes back from all 5. Like, I mean, just, you know,
We're going to take the simple one.
what take the simple one, you know, like I'm going to get the same level of coverage roughly.
Yeah.
Take the path of least resistance, you know,
Mhm.
but is that the right incentive? Like, but human nature, right? Like we've all got like better things to do than fill out an insurance application. So yeah, that's one of my like my passion projects is like how do I help create an environment or a solution that like just chucks out the insurance application altogether. Like
Mhm.
for example, EDR solution. Like I guarantee you, in most of the good EDR solutions, there is a way to like export your implementation and compare that against a best practice to show like, here's all the data on it, right? Here's how it's implemented. Here's how many endpoints on. You don't have to fill out a thing. You just click a button, you get a report. Same thing on these other types of security tools.
Mhm.
And I'm like, well, why aren't we just using the data that we have on hand? And like, what are we really gaining from an insurance questionnaire? Like, we obviously know that the data is not perfect and it changes. But like, it's already right there. Like, they're already going in their tools and say, okay, cool. You know, what's that say? All right, yep, I'm gonna write that. That's how it's implemented. So it's like, why are we doing this the way that we do? So yeah, hopefully one day we can look back fondly on the days in 2023 when, you know, grandpa had to fill out a PDF to get insurance. Like, yeah.
Yeah. Can't wait for the days of back in my day, we had a PDF and it was 100 questions long.
Yeah, exactly. Exactly.
But yeah,
Like, how did we do that?
yeah, I mean, we're definitely going to shift to a point where um, brokers, insurance companies, warranties, those things are going to want more direct access into your environment. I mean, I remember back when I used to work at MSPs, we had a client who went through a failover event, and then during the failover event, somebody asked about like, well, what about this server? And it was a name that none of us were like, what server is that? And they're like, oh, well, it was a physical server that was not part of the ESXi environment. And I was like, nobody told us about this server. How are we, like, it wasn't part of the backup. Like, what, this is the first we're hearing about it. What are you talking about? So,
yeah,
you know, because, you know, back, you know, they gave us access to their ESXi environment, and they're like, hey, do the patches, do the backups on the things in all the virtual machines you see, which we did. And it's like, all right, cool.
Yeah.
Do you have anything else you want to back up? No, we're good. Then, then after an event happens, it's like, hey, where's this thing? What are you talking about? So, but it's, and you know, that kind of goes back to, you know, there has to be a level of trust, but at the same time, it's difficult to be able to get somebody to plug into just a whole environment and see everything on the network. You know, what are you going to do? Start putting network scanners and just sit there with the IT guy and go, okay, this printer, this desktop, and then just kind of go through list by list. But, you know, I mean, I'm sure we'll get there eventually, you know, especially with the rise of cyber. You know, the COVID years really exacerbated a lot of those vulnerabilities. So maybe in the next few years.
No, I think we'll find a happy medium there. Like, I don't believe that in the near future we're going to get kind of that constant flow of, you know, behind the firewall telemetry traveling, you know, outside the network into the environment of an insurer. I don't think we're there yet. I mean, even just like where I sit now, it would be awesome for me. Like, if I was an underwriter, I had all that. But I also understand that, like, it creates a huge security risk. Like, you're actually creating more exposure by having that, like, constantly flowing out. So would I advocate for something like that? No. But could it be kind of like a one-time pull where a client is almost like an opt-in type deal that they push it out? I think that makes a ton of sense. And, you know, I also feel strongly like this shouldn't be like what we see in like auto insurance, like the telematics, like, hey, here's this dongle, press it into your car. You're going to get like better insurance rates. But realistically, like, they just hit you with it because everyone, you know, brakes hard and maybe speeds when they shouldn't. And, you know, so like, wait, what a minute, like, that's going to save me money. It's costing me more money. Yep. So there's a real fear that in the cyber insurance space, there's more carriers that are starting to like take in that behind the firewall data. There's a lot of like hesitation on the side of the business buyer who's like, what's in it for me? You know? And I look at it almost like a different way of like, to me, that behind the firewall data shouldn't be a determinant in rate or anything like that. It should be more like just how we share intelligence across different bodies and organizations. It's like we're doing this for the common good. You know, if I'm an individual CISO, like, I can see my own environment, but at the insurer level, I mean, they're insuring tens of thousands of organizations. They see much further and wider than any one individual practitioner could. So it's like, why shouldn't we be ingesting that from an intelligence perspective so that we can have like better eyes and ears, right? Like, who wouldn't want like some help there? So using it as an alliance play of like, hey, like, tap into this intelligence community. You know, we get better the more people that we have involved, but hey, we're not going to jack up your rates or anything like that. It's more of a like, we can help you here. And I think the folks who figure that out the soonest, I think will really be onto something.
Yeah, definitely. You know, patent pending. You heard it here first. But I mean, but you're not wrong. I mean, there's plenty of people out there who would love to share everything that's going on inside their corporate environment behind the firewall in their office, but are just like, that's a lot of data. That's a lot of sensitive data. We don't want to expose that information. So like, and that kind of rolls back to what we were talking about earlier about just good hygiene best practices, which is something that we in the companies that I've worked for and something that I do is create inventories. I'm not like a password list, but just inventory of we have this server here, this server does this server does that. We make sure everything that we have is kind of accounted for, because there was a company I came into that was a bit of a mess when I came in, and by the time I was done with it, it was clean, it was streamlined, it was very, because they had no they had no naming convention for any of their servers. It was just it's just company name 1, company name 2. And I was like, well, what are the domain controllers? Oh, that's server 3 and 4. And okay, so what's the exchange server? That's 2. And I'm just like, why aren't they just named exchange server? Like, ugh. But anyways, but people tend to not really have those things, especially some of these like medium-sized businesses that just, maybe it's just like 1 or 2 IT people that have just been running the environment, and they've only ever had those 2 IT people, and they know where everything is. So why would they need to document it? So, but yeah, people are very
it's a common growth pain. It's a common growth pain when you start out small. You can get away with that, right? Because it's a smaller amount of assets and endpoints you have to worry about. Like you said, small, tight-knit team. Everyone's kind of got that tribal knowledge. But yeah, you cross a certain point where you're like, whoa, a little bigger now, or a little more complex. And like, we've just kind of layered these things on. It's like, maybe we should like revisit that. Yeah, I feel like that, and like the server room memes. You start out with like a couple different servers on a rack, and you got like 9 or 10 cables. That's fine, but then you start growing, like, oh my god, like I can't see anything now, and you just have to clean it up. But inventory. Like, I mean, I don't know, like a retail store, like there's no retail store that I can imagine that is a certain size and success that doesn't have like strict, rigorous inventory control of like knowing what they have, where it is, and it's like, that should be like table stakes, right?
Oh, yeah.
It's no different.
Oh yeah, absolutely. I used to work at a grocery store down here in Texas, and twice a year we would do inventory because the point of sale system checks, it scans, and it removes things from inventory. But twice a year we would literally just manually count everything on the shelf, compare it against what the system thinks we should have, and boom, there's our shrink numbers for the year. So, but yeah, inventory I feel like is a basic concept that some places don't have. And then I kind of shudder to think of like some of the more megalithic companies like Facebook or Disney. Like, what does their IT systems look like? Are they siloed independently? Disney Studios over here, Disney Parks over here, Disney something over there, and each one of them has a different practices that they follow. And I just kind of makes me weary, because I can't imagine, because like Sony, speaking about hacks, they constantly get hacked. And the last I heard is they get hacked simply because Sony in Japan has a different set of procedures that they follow than Sony Entertainment of America, which is different than Sony Pictures. And they're all just different, and they just have different practices. So Sony Pictures gets hacked, sure. And then Sony, the PlayStation Network, gets hacked and they get taken down. And it's just, if you just unified your practices and just learned from each other, maybe you wouldn't have so many problems.
Yeah, definitely. I mean, you would think, but as I think we're all growing familiar with, it's like Sony's another good example. Like, even if they had like awesome controls in place, like just getting to the point where you described, it'd still be a massive target. I mean, they're Sony, right? They've got tons of intellectual property, tons of sensitive data, and things like that. So I mean, even if they did get the blocking and tackling right, which they absolutely should, they're still going to have a massive target on their back. Same with, any like large organization that is, well-to-do or has like really critical infrastructure that they protect. Like, and that's why I think it's even more imperative for companies like that to like get their houses in order. Because it's like,
Right.
People are already like targeting you. Like you should just like defend yourself a little better.
Maybe you should shore up the defenses a little bit better.
Yeah, yeah, and it's tough too. Like I get it. Like I mean, I would be very surprised if you went to like head of security or the CISO at Sony. Like they know all this stuff, and I bet they have like a hell of a time like convincing their board that like, hey, like I know this is going to cost a lot of money, right? This is not like a $10,000 expenditure they're looking to invest in. This is probably multi-millions of dollars to like get it right. And it's a real struggle for the security community of like, how do I get my stakeholders on board? How do I speak business? Right, because it's it's never an idea of like, well, we're going to eliminate this risk. It's like, well, some stuff we just have to live with because like the benefits don't outweigh the cost. But I mean, that's a huge thing that we help try solve for our like security practitioners that use Scorecard. It's like, how do we help you better translate? Like, here's what I need to invest in security, and here are the business outcomes. Because like a board of directors or CEO, like they're not security practitioners. Like they're not experts. They don't inherently know this. They're like, okay, you need $2 million. Like, what's the ROI on this? Like, why am I going to spend $2 million? Like, when I could be spending this on, I don't know, generating new revenue, right? Like bringing in new customers. So arming security folks with like that kind of information and data to show like, well, actually, I can reduce our exposure by like $10 million. So great, 5x return on my investment. And like, oh, now you're speaking my language. But it's hard.
Yeah, I mean it's very hard to convince the C-suite because I've literally been in meetings where we're trying to pitch just a backup system, and the C-suite is just like, we can't allocate money to the IT department. And I think that's like because a lot of people who maybe if they haven't experienced it, they don't understand that, like, yeah, the IT department in theory does not generate revenue, but without the IT department you can't generate revenue. So like they kind of get lost with this. Oh, well, why should we allocate more money to them? Because it's like, hey, if we hire more workers, we can process more stuff and get more money. If we hire more salespeople, we can make more sales. Like they, that's the way they look at it. But if we put more money into the IT department, oh, well, what's that going to get us? Well, you're not going to have to pay a $5 million ransomware fine. Like I think that's a good turnaround.
Yeah, and speaking of like ransomware, like I would be very shocked if there aren't a like growing number of companies that have ransomware payment, extortion payment as a line item on their balance sheets now, right? Like they're like, hey, like it's gonna happen. Let's start allocating, $250,000 every year for that thing to come in. And like that's the problem. Like in the business sense, like you're talking revenue centers and cost centers, and traditionally IT or security is viewed as a cost center. Right? It's like, well, it's not generating revenue for us, so it's a cost. So like, what's the cost? Versus revenue center is like, oh, this is an investment.
Right.
So switching that framework and that viewpoint is I think critical. But now, I mean, you see more regulation coming on, and theoretically now we're going to see more boards of directors with folks that actually have cybersecurity experience. Somebody's going to have to like report directly on that. So We'll see if that works. Maybe it will move the needle for publicly traded companies, but still a ton of privately owned companies that are not subject to those SEC guidelines. So
yeah, one can hope that we
one can
move in the right direction there.
Yeah.
But anyways, I think that's going to do it for this. I think that's about all the time we've got here. So I'm going to say thanks for listening, and always stay tuned for the next episode. And thanks again to Andrew for joining us.
Yeah, it was a pleasure. Thanks for having me.